Let's welcome in our next guest. We have Deven Choksey, MD at KR Choksey Securities, joining us from Mumbai. Deven, thanks so much for being with us on NDTV Profit. We're just about a day away from expiry. Do you see some of the short covering already starting? Stocks like Yes Bank are higher. Do you think the markets have given a signal that they're not really breaking down too much from here on, and now they'll only head higher?
I was about to reply on that aspect. The short covering led rally has to happen, I think, during the course of expiry. In last 3-4 days time, we would definitely see some amount of short covering and the rollover of the position once again taking place. Till yesterday, whatever the data which I had gone through, maybe I think on the stock specific side there has been somewhat drop in the open interest. I think if that is the reason to talk about. I would think that the market is basically ready to move into the new direction. On one side, we are having the large amount of inflow of money coming from the domestic side. Also from the overseas side, the inflow of funds are coming in. And this time around, the money is being deployed in the large cap stocks where the fundamentals are supportive. So overall, I think we see that with some kind of a nervousness due to the global factors, including I think the LOC related attacks which have taken place yesterday in India and Pakistan. So I think some amount of nervousness is there in the market, but at the same time every fall or a dip in the market is being used as a buy opportunity by most of the funds.
So then do you believe that the Nifty is unlikely to go to levels of 9,200 or 9,000, and whatever correction had to happen is done now? Do you think it will head only higher from here on?
Well, according to me, I think every fall would invite new buying. So I do not know whether I think it would mean further fall in the market and then buying would emerge. I would think that market may remain sideways for some time because the overhang of the situation could possibly continue for a while. So, and particularly I think on the border front, whatever is happening, I think that could have a overhang. And that's where I think you might see some amount of sideways movement continuing before it goes up. So yes, I think you could possibly say that in current levels and maybe some fall in between would be the fall in which I think the market would find new buying taking place.
Right. Then looking at the open interest additions or reductions, which stocks do you think will do well? We're already seeing Yes Bank moving up with quite a ferocity. It was singled out for selling in this series over the last 10 days. Are you now convinced that the correction for Yes Bank is over, or could it see lower levels again?
Well, I wouldn't know, I think, exactly about the positions on the Yes Bank side, so wouldn't comment on whether I think it has led to the short covering of the position. But my strong understanding on the company, the fundamentals of the company says that the business is basically showing up a distinct amount of growth, and probably one among those corporate banks, private sector banks, this bank is basically growing at a reasonably high level of growth. So I would think that yes, a correction of any degree or a fall of any degree is a buy opportunity into some of the corporate banks, including Yes Bank.
All right. What have you made of the fall that we've seen in the pharmaceutical stocks? There seems to be no floor after large cuts of 4-5% a day earlier. Today too, some of the pharma majors are under pressure.
Well, I don't know. I feel that many of the pharma companies have become reasonably valued now. They are probably in line with the market valuation, or in some of the cases they're cheaper to market valuation when you look at 1 year forward estimates. Fortunately, in most of the pharma companies we have got a decent amount of A&D pipeline, and as a result of which there is a visibility which is quite significant. Now there is an argument on the subject that you have some amount of pricing pressure on the pharma products. Now this could be a continuous process. I don't think that one can immediately react on that. But my reading says that most of the Indian pharma companies are relatively in a safe zone compared to the valuation at which they were quoting earlier. I think the valuations have become far more attractive. So they are relatively in a safe zone. And though there may be some uncertainty, I think this may be the time to buy into some of the pharma companies for 2 years view and above.
All right. So long term, investors can look at buying some of the pharmaceutical space. Deven, what about PSU banks? We've seen a big cut come in Bank of India post its earnings. So there were concerns about its asset quality. Now again, we're getting more, the details of the NPA ordinance will come in. How would you approach some of the PSU bank names now?
So, segregate the large PSBs vis-a-vis the mid-size and the smaller PSBs, and the focus on large PSBs. That is the immediate answer to your question. And large PSBs also, I would like to say that they have largely gone out of this particular pain process of identifying the non-performing assets. Having identified NPAs, now the next round of actions would start. The autonomy that the RBI has got to basically recover the money from the defaulting borrowers of the bank is giving a good amount of assurance that most of the borrowers would start paying up. Fortunately, economic conditions are improving, and as a result of which the borrowers who have been up till now defaulting may find a way to pay back to the banks in due course of time. If this situation is going to be true, and maybe we can see the results coming out in subsequent quarters for respective companies to whom the banks have lent money, I would think that the PSBs could possibly show an improvement and distinct improvement going forward. Fortunately, most of the good quality PSB companies who have technologically also advanced themselves, and they are carrying some of the businesses within them as subsidiaries. I think they are building a lot of valuation therein, and that is not getting reflected into the price. Second thing, the price is basically on a book value basis is remaining quite compelling, quite attractive. Many PSBs are quoting at 1.5 times, 1.6 times price to book. So downside risk is limited. So all in all put together, I feel that I think there is a good opportunity. Once again, a 2-year view has to be taken, and then buy these companies selectively and with gradually, I think, during every fall.
Deven, I want your views on two stocks that are reacting to the earnings. One is Voltas. It's seeing a blowout move, up 10% on a strong open interest addition for the June series as well. And Tata Motors. Both these stocks have reacted positively to the earnings. How do you view these stocks?
We are distinctly positive with Tata Motors. We have been maintaining our view that this is one company which has got a very strong portfolio of vehicles, passenger vehicles, particularly in JLR, where they have been undervalued according to me. So they could possibly get re-rated, and I think the valuation could become probably on a higher side. On the other side, the domestic market portfolio, where they have a lot of opportunities in form of commercial vehicles, the company is distinctly showing a good amount of improvement prospects, as I may want to call it as, because new emission norms are coming in, vehicle scrappage policy is being introduced, new roads are emerging. So all in all put together, it is leading to the higher demand for commercial vehicles, and of course with GST the logistic movement is expected to improve significantly, which is going to be the demand revival for most of the commercial vehicles companies. And according to me, Tata Motors probably is in a better position right now, with the valuation remaining far more attractive. They are quoting at least 50 to 60% to the market valuation currently. So I think upside headroom is quite significant. My reading says that I think should this normalized scenario be seen in next 3 to 6 months, probably you could see likes of Tata Motors doing much better than what they've been doing up till now.
All right, your view on JSPL. It came out with earnings where it's managed to narrow down its loss. Utilization levels across steel plants are better. Do you think it improves from here on for companies like JSPL, or would you still avoid this name given the uncertainty about the court cases and all those things?
Well, I think since the stock is not under coverage for us, I think it is not appropriate on my part to give any recommendation on the company per se. But in general, I believe that the sector, metal as a whole, I think is basically showing a distinct amount of improvement signs, and the prospects are emerging brighter. So given this kind of an opportunity into the metal segment, I think we would remain confident. I'm not too sure about JSPL, but I feel metal sector in general I think we feel relatively more confident, and we have definitely, I think, liked this particular space for a turnaround situation for next 3 years. We have been recommending metal for last 6 months to 9 months or 1 year almost now, and we believe that I think it's a 3 years of bull cycle which is emerging from metal sector, and we are probably at the beginning of that particular bull cycle. So certainly we like the metal as a space from the investment perspective also.
Right. Deven, just wanted to understand for metals, do you think global growth will pick up? Is that a call that you are taking, that global infrastructure growth will pick up, which will lead to metals doing better from here on?
Well, on Pankaj, on one side you have the global environment where the situation is only showing some signs of improvement. One, how much improvement it will take place in subsequent quarters, I think it would be somewhere we'll have to rely on the data which keeps on coming from quarter after quarter. But more importantly, the crude oil prices, I think they are going on the downward trend. And should this be the situation, the metal commodity prices would remain stable to improve. In this kind of an environment, when the prices remain stable and improving, probably the distress will go out of the system. China as a factor also is showing a gradual signs of improvement for consumptions. All in all put together, reading says that I think metal as a commodity would find the demand revival little longer, but I think will take place for sure. On the other side, we are talking about India. In India, the metal as a commodity would probably find, I think, significant amount of demand traction because of the infrastructure projects which are under roll. And that's where we believe that I think the metal consumption, offtake and the price would all cumulatively come together for the metal commodity companies to show relatively better performance going up from here onwards.
Right. Just in terms of metals, how do you value these companies? Do you value them on the basis of PE, or how would you look at them? Because it's very difficult to find a top or a bottom based on the price to earnings multiple.
You're right. I think price earning, I think definitely is an important parameter. You can look into it. But more importantly, many of these companies are also troubled with the debt portfolio that they are having, and they have been significantly writing off their assets also because of the impairment issues which are coming up due to overseas investment also in some of the cases. So the way in which we would look at it, I think currently we would probably look at the companies on EV to EBITDA basis. I think more particularly to establish whether I think there is a case for investment, I think, to the enterprise value. And once I think you see the debt component coming under control, probably I think the PE factor would be more relevant to be assigned to as far as the outlook for the companies and the earnings is concerned. So there is no one answer to it, but I think you'll have to look at both the aspects, I think, on the enterprise value first to begin with, and on the other side, the price earning ratio thereafter.
Right. Deven, what will be your view on the bad debt situation? Increasingly you're getting news about big groups like Videocon, some others defaulting. What is the sense that you get about debt for these big groups? You think that is the big thing that one has to just go through in the next 6-8 months?
It's certainly, I think, a cause for nervousness in the market, because I think the overhang on this subject is definitely not good. Most of these, I think, defaulting companies are under the knowledge of the market, and market has already discounted them on the valuations for sure. But the fact remains that I think these companies are now coming up for the case, the revival, either revival or for sale, whatever you may want to call it as, whichever the situation emerges. I think that would keep the market momentum slightly under check as far as I think their lenders are concerned, the banks are concerned. And that's where I think you could possibly remain somewhat circumspect, if not more. Given that kind of a situation, the obvious outlook is going to be positive. Let me put it very straightforward here, that its long-term outlook is going to be very positive. However, in the near term, you might see some disruptions happening in the companies which have lent money to some of these defaulted borrowers. So, very difficult to answer whether I think it would be one straight cakewalk or whether it would have some amount of trouble and then after a smooth walk. Maybe we'll have to review this subject, I think, as it progresses from time to time.
Right. Deven, do you think that that's not only important for banks but the entire market? What's the haircut that they take? What happens to big groups and NPAs over there?
Yeah, I think that's what I'm referring to, that you are not in a position to conclude what kind of collateral damage it could have, because in every situation it might differ. I think there is no one single formula which would say that I think this is going to be the collateral damage. And how long that collateral damage also, that is not clear. So that is where I said that I think this could remain as an overhang in the market, this could remain as a situation of nervousness in the market, and this could have its own implications from time to time. But as I was making a point that eventually the outcome is expected to be positive. So if one is moving into that direction, it is for the positive outcome. So that's where I think one would also find the opportunity in the given nervousness or the breakdown which might take place in some of the companies from time to time.
Right, Deven, thank you so much for taking out time for us. Always good to get a perspective from you.